Hey, welcome back to our podcast, your go-to source for all things real estate and lifestyle in the heart of Fort Worth, Texas. I'm Jackson Christian Berry.
And I'm Jean Kristen Berry.
And together, we're here to guide you through the vibrant world of Fort Worth and surrounding suburb living.
We believe in creating a community where everyone feels at home. And that's why we're committed to bringing you honest, expert advice in a fun and friendly way. From the bustling streets of downtown to the serene suburbs, we've got the scoop on what makes each area unique.
Each week, we'll dive into the latest market trends, offer tips for both buyers and sellers, and share insider knowledge to help you make informed decisions. So whether you're a first-time home buyer, a seasoned investor, or just curious about some of the Fort Worth charming neighborhoods, you're in the right place. Let's jump into today's episode. Well, hey everybody, and welcome back to our podcast. We're really excited today. We've got Jefferson, the man, the myth, the legend.
Well, thank you.
In the house today, talking mortgage, just all things mortgage. We really got to kind of dive into the details of mortgages and stuff like that. But we do a lot of business with Jefferson. He's probably one of our favorite people to do business with. He takes care of our clients really, really well, and we're really thankful to know you and to do this thing with you. So thank you.
I appreciate that.
Well, so tell everybody who you are. And my question is, what was the defining moment that the defining moment that made you want to do real estate lending? What was it?
Wow.
But tell people who you are first.
Okay.
Yeah.
Jefferson Aldredge from Guild Mortgage. I've been doing loans now for over 20 years, 20 something years. I have done thousands of loans.
Yeah, sure. Yep,
So
believe that.
At some point in your career in this business, after you've done a few thousand loans, you look at a loan and go, hey, I think I can do this one, even when it's one of those puzzles that somebody has said, this can't be done. And you go, nah, I don't know. I think this loan can get closed.
Yeah.
So, I'm a father of daughters. I'm a husband of a little over 26 years now. We just had our 26th year anniversary.
That's awesome,
Thank you very much. I think that probably, for what we're trying to do, but I've been in the business a long time. I try to make sure all the families we serve get the best possible service and loan options and education. Because education is a massive piece of this mortgage, or what a mortgage is. This is the most expensive thing you'll ever buy, and I think people need to understand what they're getting into.
Yeah, absolutely.
So how about that?
Yeah,
That's
we appreciate that.
Yeah, absolutely. Yeah, it's a big deal.
Thank you.
Helps us too to know a little bit what's going on. So we appreciate it.
Yeah. We have to work as a team.
That's right.
Right. Otherwise, it doesn't work well when the experience is not good when we don't all work as a team.
Yep,
Absolutely. Yeah.
Well, I'm really excited I convinced him, y'all, to give us kind of his very controversial, maybe not, I don't know, you're going to tell us if it's controversial or not, 2024 mortgage rate prediction, which we're going to talk about later in the show, so just stay tuned for that. But before we even get into that, let's take things down to the studs.
Okay.
Like, talk to me like I'm 5, okay? Got a cute little baby face.
You kind of do.
Yeah, there you go.
You just cover it with hair.
That's what you got to do, man.
Yeah.
What is a mortgage? Like just at its basic level, and how the heck does it work?
Okay. If you were 5, how would I tell you what a mortgage is?
I love this. I can't wait to hear this.
Okay. You come to me and say, I want to buy a house.
Okay.
And I say, well, how much money do you have? And you say, I have $1,000, but the house cost $100,000. I say, well, how are you going to buy the house if you only have $1,000? Because you're 5, remember? And you say, I don't know. And I say, well, I will give you the other $99,000, but I need to get something in return for giving you $99,000.
Yep.
And over the next 30 years, you're going to pay it back.
Yeah.
Okay. So I charge. The bank charges, we charge, the mortgage business charges interest for that $99,000 in return to let you use it for the next 30 years. So, and then at some point in time, you will then pay us back that $99,000 with the interest. So if you were 5, I think that might suffice.
Sounds pretty good. Yeah.
Possibly.
Yeah, I'm here for it. That's good.
My girls, when they were 5, they would be like, Dad, what do you do? I'd be like, I'm in the mortgage business. They're like, who cares? Next. That word didn't even make sense to them. They're like, no thanks. I don't even want to know anything. Let's go do something fun.
totally. And I think what's really, you talked about education earlier. For me, what I keep getting hit over the head with in this industry is just there's such a lack of education, upbringing about how to do houses, how to do mortgages, how to do all this stuff, right? You hear little, cliche things, 20% down, like those are things that come into, you hear that just in the world around us. But then you don't realize the details that go into that kind of stuff. So this is awesome. I appreciate that.
Sure.
And we have so many clients that just kind of nod and they like we know what you're talking about, but they don't.
Yeah.
And so it really does help to be a person that you can approach and talk and ask questions to like that.
That's a big deal.
Yeah.
Now, I get this question a lot with clients. How do banks, mortgage lenders, and just mortgage brokers all differ, in terms of mortgages when it comes to that? Why I shouldn't say why shouldn't I? What's the difference between me just going to my bank that I bank at frequently, if it can do a mortgage, versus coming to somebody like you or whoever else is out there, right?
Okay, let's just put them into 3 different categories, and this is let me try to be tactful about it. We won't disparage any names of companies or banks or anything. Let's do simple. Okay, simple's way easier in this thought process.
Yep.
When you walk into a bank, you can go ask for the loan officer. They might be able to do a mortgage for you. They might be able to get you a car loan. They might be able to get you a safety deposit box. Or they may only do loans. Big banks and most banks are very siloed, as in they're like, if you go to the big box banks, underwriting might be in New York. Processing might be in Miami.
Interesting.
The part where all the documents get fed to in that system or data system, storage might be in San Fran, just as an example. So their world is so huge, the big box banks, and there's so many people working on a loan. You are, in essence, a file number, and the loan officer that you go through may be fantastic, but they work 7 or 8 to 4 typically.
That's what I was going to say.
They don't have to answer. Not on weekends. They don't have to answer the phone after the time that they get off, of work at the bank. That is typically, a very we'll talk about that on Monday.
Yeah.
It's, Friday at 3:00 and you're trying to close on Monday afternoon, and you've got a question. Well, I don't have time. I'm off work, et cetera. So, there's all of those things that come through in the world of banking. Okay. So now some banks do mortgages pretty well. But they also have to do everything else. I always tell people my bank, whom is a big box bank, they're a great bank. They do everything really well. Not mortgages, okay? It's extremely personalized. There's a lot of education behind it. I have a small team that does all the main work. And then we have in-house processing, underwriting, our funders. We control everything and we service the loans. So when you do a loan with us, if we keep that loan, which we keep almost everything except for maybe a jumbo loan and then maybe some of the down payment assistance programs as an example, because of what Wall Street does. Okay. So, but everything else we keep. And in that, our service and our experience, the experience for the buyer to be able to do a loan with a mortgage banker is what we are versus a bank. There's a customer service issue a lot of the times, levels of customer service. There's who's keeping the loan, who's selling the loan. Banks a lot of times will keep it, but not all the time. We're a little different in the fact that we keep almost everything. Okay, so our portfolio, we're currently servicing over $100 billion in loans right now. And we've won J.D. Power's annual awards for servicing. So that's kind of a big deal. Once you have a mortgage and your mortgage gets sold off a couple of times and somebody comes to you and says, hey, I can do your loan, and we keep them and we service them, and all of a sudden people go, I'll take that place.
I've had clients that have gone with a particular lender just because of that.
That's right.
Because they want their loan serviced by who originates it.
That's exactly right.
Well, and the other thing, I would assume the fees are the same.
Yes.
I would guess. And so that's the whole part of that too. Is you're not. It's not like you're paying billions more, millions more, thousands more for higher customer service. It's like you can pick your experience. So why would you? Yeah, that's
most people don't know.
Yeah, and that's exactly exactly. They just don't even know to even consider that. Yes, totally.
Now, brokers. I was a broker 20 years ago.
Yeah.
Okay, so now I can still broker out a loan currently. There may be some off-the-wall product for a self-employed borrower that writes everything off on taxes and they can't do a loan, so they do what's called a bank statement loan. That's a brokered loan. So I go to an investor and I say, hey, Mr. Investor, I have this borrower that needs to do a bank statement loan, a P&L loan.
Okay.
They don't do taxes. I mean, there are self-employed people who just don't do taxes. I mean, it exists, right? So what you would do is you would go and broker that loan to that investor or lender, okay? But they only do business with lending entities like me. They don't do business with the public. Okay, that's what an investor is. So there are brokers that only broker. Okay, now we're a mortgage banker who just has the option of brokering something if we choose to. I don't broker very much.
I've had clients that specifically did not want to work with a mortgage broker.
Yes.
Is there a downside to that?
It's a control issue.
Okay.
So for instance, if I broker a loan, normally let's back up one step. Normally, if you come to me and say, hey, Jefferson, which we've done several times, lots of loans for y'all.
Yeah.
Hey, we've got this deal. We just got a contract in. Buyer and seller need to move in 14 days. This deal's got to be done. Okay. Well, I control it. I have underwriters. We have everything. So I say, hey, team, here we are. We got to rush. We got to go. Let's get the appraisal order. Boom, 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 boom. We put everything in place. The flow starts. We close the loan in 14 days. All good. Okay. Everybody's happy, funded, etc. If I broker that loan, the investor that I'm going to could care less.
Got it.
They don't care about us needing to get these families moved.
Got it.
It's a numbers.
They have a 7-day turnaround for underwriting, as an example. They will order the appraisal and it's on a 12-day wait through an AMC.
Sure.
Period.
An appraisal management company.
Yeah.
None of what we need, you and I as the team to help the families, factors in to what the investor will do differently on their part.
Yeah.
We don't matter. We are a file number to them.
And that's the experience on the client end that we see. We see that the individual situation for that client is not really considered in some of those kinds of situations. So that makes sense. Okay.
Yeah. And here's the reason why. The investor never talks to the consumer who, if they don't move in 14 days, they don't have a place to live.
Yeah.
If they actually had to talk to the consumer, the world of brokering would be very different.
Sure.
But that's the beauty of being the investor to a broker. You don't have to deal with the consumer. You don't have to deal with the emotions. You don't have to deal with the problems. So they only have to do what they have to do, which is get a loan in, underwrite it, say here we are, and their time frame is only their time frame.
Gotcha.
I feel like too, what I hear the most frequently from clients when they're talking about this, it seems like they think mortgage broker gets me all the options.
That's what they think.
That they think that, I want to go to a mortgage broker because I want to make sure that I have the ability to get every single product out there. And so I think that's the biggest thing that's with that, which is interesting to hear the other side of that for sure.
Sure. Like we are approved with probably 100 different investors. Like it's insane the amount of loans we can close or types of loans. I might close, below 10 loans a year that I broker out.
Wow.
Because I'm in the business of producing said results for the clients and the families. I've got to get loans done on time, efficiently. I need to control the experience and the service. When I take a loan that I know that we can get done on time in a brokered fashion, then we will do it. But if I can't deliver, then all I'm doing is making everybody angry.
Right.
And you can't make families angry. You can't put them in bad positions. So it's only the loans that we take in that I know that we can broker out and get them closed on time.
Yeah.
Otherwise, everybody
Lower
gets
that.
Sure.
Yep.
We've had situations where if we can't close it on time, the seller goes to another buyer.
Yep.
Yeah, and they keep the money, the earnest money,
they
and the
keep the
option
earnest.
fee.
Yeah, and I think that's the reason why, we work so closely together is because we can't do what we do without you. And it's just like, it has to be that way. Because the people can't afford the houses. You have cash buyers for sure that come through. But, if they're using a loan, you have to have somebody you can rely on. And for us, sometimes we get clients that come in that have a lender that they already are hooked up with and that kind of stuff. And every lender does things different.
Yeah.
And so the other thing is that for us, it's just so enjoyable working with y'all because you have such great systems in place and you have such great, we know how it's going to go every time. There's such confidence behind it. Mm-hmm. And that's really hard to beat. Because some lenders we work with, a lot of lenders do a great job, but some lenders we work with, there is a little fear along the way. It's like, okay, that's I'm not 100% sure okay, you good? Like, did we get that? Okay. And with that, there's none of that deal.
Yeah, because people come to y'all with their lender. They're not leaving their lender.
Yeah.
They've used them before, whatever,
Sure.
and so now you just have to rely on the fact that because you're not using your preferred lenders, so that certainly provides a little angst in your,
a little
okay, are we going to
uncertainty.
close on time or not?
Yeah.
Here,
A little uncertainty.
because you don't know,
You don't know.
because there's they could be bringing lenders from all over the country,
Yep.
Sure.
every .com.
Well, I was just .com. So that's what I think we hear that more than anything now. Rocket
Yeah.
with Rocket and it's one of the main ones for sure. So man, it's crazy. So well, talk about locally, our audience here is mostly DFW residents, right?
Yes.
So is there anything that a DFW resident needs to know specifically about lending in this area, whether it's trends that you see that's specific to this area or maybe products that are available to them that just because they're in this area or Texas or that kind of stuff?
Sure. Texas has its own products when it comes to down payment assistance. I think that's what makes us a little more unique. Texas, we have 3 or 4 main down payment assistance programs. Most families don't know they exist.
Wow.
And they're not marketed to the consumer.
Sure, right.
Okay, so now there are lots of lenders, brokers, banks that don't do these loans. So there are probably families that will never know they exist because the bank that they went to or the lender that they went to chooses not to do DPA, which means down payment assistance, just an acronym in our business. So, if you're listening to this podcast, ask your lender, hey, do you do DPA? If so, which one do you do?
Yeah.
What are the ins and outs? What are the pros and cons? How does it help me?
How
How
do you
does it hurt
qualify?
me?
What do you do?
Yeah, what do we need to do here? So I think that's locally in Texas. Locally, it's the same thing all over Texas.
Yeah.
But a lot of people don't know they exist because a lot of lenders don't
Just
do
don't
them.
do them.
They're not set up inside the systems. They're not good at them. They choose not to do them. You don't make as much money on a DPA loan.
Wow.
So therefore, a lot of lenders won't do them.
Yeah.
And this is America. It's capitalism, so they don't have to.
Yeah. Right.
Right.
Well, then that's a great segue into the next thing I want to talk about because first-time home buyers, right? Somebody who's never done this kind of process before, who's never had a loan before, who's never seen it serviced before. We get the question from our clients all the time, and that's just the basic question of how much should they put down, right? So talk like down payments when it comes to that.
Sure.
How do you walk somebody through figuring out what their down payment should be?
So here's my general thought process, right or wrong. I'm not a Ramsey guy.
Sure.
Okay. So not when it comes to this, and a lot of things Ramsey says I think are fantastic because I'm conservative. Okay. But in the world of buying your first home, I believe you put the least amount down, so you've got money for everything that you didn't calculate in that comes your way.
Okay.
Yeah. My daughter's house had a plumbing leak. Well, if you don't have money to pay for it because you were told by your family that you need to put down 20% because you don't want PMI.
Right.
Well, if PMI is only $32 a month,
Sure.
why would you get rid of an extra $20,000 or $10,000? Like the calculations and the logic behind it makes no sense to me.
Well, the time it takes to make that with the $32 a month.
Absolutely.
Or just charge it on a 21% credit card.
Yes,
that
yes.
can,
The world of home ownership is not cheap.
Yeah.
there are lots of people that shouldn't buy homes because they don't have the funds to fix the home when things break.
Yeah.
Your AC goes out in Texas, that could be $1,000. It could be $10,000.
Right.
And there are families that buy homes that don't have $10,000 and maybe don't have family members that they could get that money from if something happened. And then they can't live in a house with no AC in Texas and 120 degrees with 2 babies and a dog.
Right.
So what happens? I mean, that's our reality, right? So either A, they have to finance it, B, they got to get gifts, C, they got to get a third job driving Uber after they work their other 2 jobs.
Right.
Whatever the situation is. But when you're young and you're buying your first home, that is, I went through that as a young man, but buying your first home, there are programs out there.
That's my next question is like, what does somebody as a first-time home buyer need to know? Are there unique programs for them out there? For a down payment assistant, that kind of stuff.
Yeah, so first-time home buyers, it's a little bit of marketing, right? So everybody says, we have this first-time home buyer program for this, we have it for that. But it's a little bit of marketing because all it is a company saying, first-time home buyers get X. So your main issue, every first-time home buyer gets the least amount of down payment.
Okay.
Whether it's 3.5% for FHA or 3% for conventional. Okay. We even have a 1% down program.
Wow.
Okay.
Wow.
So, I mean, just if you're not using a DPA, down payment assistance, we have a 1% down program.
Wow.
So just to give
that's insane.
Yeah, I mean, families can buy homes. When they are ready to buy, 1% down.
That's nuts.
So you still got to cover your closing costs.
Yeah, their costs along the way for sure. But still, that's massive.
So much cheaper. Hey everyone, real quick before we get back to the show, if you're on Facebook, Instagram, or YouTube, we'd love to connect with you. We post a lot of content like this in case you miss an episode, along with more Fort Worth and surrounding suburb, local insights, and finds. You can find our team at the Christenberry Group on all social platforms, or you can connect with Jackson and I personally on our Facebook and our Instagram accounts. Just be prepared for lots of pictures of my grandson on either account. Now back to the show.
Let's play that out, right? So you hear 1%, you're like, wow, I can get a house for, if it's $400K home, 1%, 4,000. You're getting to... 5,000 in closing, maybe more, 10K, 14,000 to buy a home at 400K if you can get approved for it, right?
Sure.
So what's the argument to that? What's the danger? Is there a danger first is the question of doing a 1% down? Why is this 20% down thing such a thing out there? What should I know about that?
I've never understood, and I'll make it a generational thing. I'm not a boomer, but I'm really close, right?
Nice.
So I'm almost a boomer.
Cool.
But I think the greatest generation and the boomers put down 20% or more when they bought a home. In previous, that's the way lending was. You either put down 20% or you didn't buy
nothing.
a house.
Oh, okay. Okay, so that was a regulation thing. Okay.
That was, it's just the way that's the way banking was.
Interesting.
And then that thought process just carried on. Still today, media still propagates 20% down, home loan. It's like, not a whole lot of people put down 20%, especially first-time home buyers.
Totally.
They're putting down 3%, 5%, 3.5%. That's very normal. Or they're doing DPA programs, or they're veterans and they're getting 100% down. So I think when you actually look at the actual stats, why the media always says that, no one really knows in my business. It's like, when you look at it, because we just see all the products and we deal with all the people and all the loans, are going, it's a really small amount of people per month putting down 20%. It doesn't matter the market.
Interesting.
It's still a small amount of people.
Is it? No, that's interesting.
And I get that. I think what I hear the most is like there's some insulation that they feel like they get by doing that 20%. Right? If my home price goes down by 3% or 4%, I've got a little more cushion. I hear that argument with this conversation.
Yeah, but what does it do for you?
Exactly.
Like, how does it benefit you? You really just took 20% out of your
savings account or whatever.
Savings account
and put it in a new savings account
that you could have invested in something else or bought another rental property. To me, there's so many other things to do outside of putting a bunch of money down on a primary, a home that you're going to live in. That's my
Yeah, totally.
General
Yeah,
thought.
yeah, yeah.
Okay.
Yeah, and like to your point, Ramsey would be all over that for sure.
Ramsey would call me a total idiot.
Yeah,
Right.
He'd say, don't finance on that.
But you know what? He's a bazillionaire,
Yeah.
and he's way more intelligent than I am. But I'm in the mortgage business. I sell loans,
Sure.
right?
Yeah.
So, but I could, it just for first-time home buyers, if your choice is to live in an apartment and raise a family, or go do a down payment assistance or a 3% down loan and buy a home
Yep.
and start building wealth and equity in the family
Yeah.
dream
Yeah.
and have a backyard,
Go ahead.
I'm going to tell you,
Yeah, let's do
Yeah.
it.
put your 3%
Let's do
down,
it.
buy a home.
Let's go.
You got an extra $10,000 in the bank. You got an extra $5,000 to cover if something goes wrong.
Yeah.
Even an extra $2,000 or $3,000. Or you have family members. You could say, "Mom and
Right.
Dad, I need to borrow $2,000.
Yeah.
The washing machine and dryer went out, or we got to come to your house." You
Watch
just
the
have
phones,
you got to
yeah.
have a little bit of reserve.
Yeah.
That's just logic.
Either
Yeah.
cash reserve or people reserve.
Yeah,
Just
absolutely.
some kind of
Either way,
reserve.
Yeah. And most people have one of the two.
Yeah.
Yeah. Well, I love, talking to home buyers, especially, open houses or wherever I meet them. It's so interesting to hear, they always want to know what's the interest rate going to be, right? Like that's always their big question because
Yeah.
that's the buzz, newsworthy topic.
It's very
right now.
it's an emotional deal.
It's a big deal, right?
Yeah.
So what I love though is that really none of us know. We can guess, we can do our best educated guess, but none of us really know what's going to happen, when it's going to happen.
Yeah.
Even though you've got this great prediction coming up, don't you forget that.
Sure.
Crystal ball.
That's coming. That's right. We need to hear it. The one thing, if you look at data, just data alone, if you look at what homes do in America, they appreciate.
They appreciate
They
it.
appreciate it.
Okay.
If you-
They're
there
investing.
are windows where they are depreciating, but over time that line is heading up.
Yeah, they go in cycles.
It's just going exactly,
Yeah.
but they're still like that line is. It's not like it's going. It's
It's
not
just
a
like
wave,
stock.
right?
Stock does the same thing.
It's always tracking up, even if it for 2 years or 3 years it tracks
Yeah.
down. So, anyways, the point being is that. Yeah, why would you not want to get in a house with it where data just supports? Obviously anything can happen, of course,
Yeah.
but data supports that it's going to be a good investment.
It's just logic.
time. Yeah, exactly. Yeah,
And it's structured. Like you are paying on that investment.
And you get to write off the interest.
Yes.
You get to write off your property taxes.
Yeah. Yeah, there's
you
some
get to
advantages.
realize things against earned income
Yeah.
that other people don't.
Yeah.
And a lot of times families don't factor that into their.
Improves your credit.
Yeah.
Yes,
Paying
the
off
credit deal
mortgage.
is huge.
Yeah.
Nothing drives your credit up more than having a paid on time mortgage. That's
Yeah.
it, just that simple.
Yeah.
Yep. Well, since we're talking about down payments, obviously that's a part of the closing costs, right?
Mm-hmm.
What other closing costs would somebody encounter along the way of buying a home with a mortgage?
3 buckets of closing costs.
Okay.
Lender fees, title fees, and escrows,
Cool.
which you would call your taxes and your insurance.
Okay.
So I think it's real simple, just the way I teach it, or when I'm educating clients and buyers and borrowers, and is you look at those 3 buckets. You can break everything into those 3 buckets. So how much is the lender charging me? How much are my taxes and insurance? You're not getting around your taxes and insurance.
Yeah.
How much is the title company charging me? A lot of times the title company is negotiated on the contract. You're not getting around that. So, and lenders all charge lender fees.
Yeah.
Right.
We don't do loans for free.
Yeah.
And, no one does.
Yeah.
It takes 20 something people to do one loan for one family in my world.
Wow.
Wow. You can't do it for free.
Yeah.
Wow.
Because you
Yeah.
got to pay all those people
Wow.
to work.
Sure.
So it's you break it down into those 3 buckets,
Okay.
and then people have a sense of, okay, is this a lender fee, a title fee, or is this my taxes and insurance?
Yeah.
Okay.
Easiest way to put it.
Yeah, makes sense. All right, well, talk to me about what's coming down the pipe. So at the end of this, we're going to talk about that mortgage rate forecast. But anything that people need to know about that maybe changes in the lending landscape, whether it's on the business side or that consumers would be interested in, or are there emerging technologies or things that you think are really interesting that headed down the pipe for consumers to be aware of?
I've got a couple of things coming up.
Cool.
First, we'll talk about. Let me add something to just for the first-time home buyers because
Yep,
there's
cool.
so much to speak to. In
Yeah,
that
totally.
world, right?
Yep.
Number one, you got a bunch of pent-up demand coming.
Mm-hmm.
We've got homes sitting. For the last 2 or 3 years, families have been sitting since rates have gone up. Now, all those when rates go down, all those families are going to start selling, and all of the people that have not bought are going to be doing battle
Yep.
with people who are ready to buy again.
Totally.
Selling homes, sitting on equity, walking in with lots of cash, which is what happened during COVID and right after
Yeah.
COVID. People paying $150,000 over list price.
Cash.
It was amazing to see, people coming from all over the country and just paying cash. Sure, hey, I really like those houses. The houses you want at $350, no problem. I'll give you $400 right now. Sell me. Oh, can I buy the house next door? Because I just came from New York, and houses there were $5 million, and I just made $4 million, and I'll take 3 right here.
It's like Monopoly, wasn't it?
I'll just I'll put. I mean, it was so bizarre to see this happen from people coming all over. So the world of what's coming next is to make sure that you got a good realtor to help you figure some of this stuff out, because a lot of people are relying on the internet to help them find and buy homes. So now I'm saying that for y'all because I believe you're providing a service that a lot of people do not understand the value of. Okay. And I've seen all sides of the transactions. So if you're a first-time home buyer or a second-time home buyer or a 10th-time home buyer, what an agent, a good agent, and a good team does for you is worth what they go through, and you're covered by all the TREC laws and everything else. And people going outside of that system don't really understand what goes in a contract and why. And I see a lot of contracts with a lot of funny stuff, and I go, wow, you got a brand new agent, or you don't have an agent, or who negotiated this? This is sad, So that's just that's a Jefferson disclaimer.
A PSA.
Yeah, and that's for y'all. That's for the Christenberries, because I have done a lot of business with y'all, and I appreciate what y'all do and why you do it. Okay, so total cost analysis. One thing that we do for every family that gets a pre-approval, we send out a total cost analysis.
My favorite thing to pitch y'all on. My favorite thing to sell y'all on.
So nice.
Anybody you talk to is like, hey,
So nice.
you explain it. It's just awesome.
Okay.
It's just fantastic.
So we produce a set of numbers. Let's say you're buying a $400,000 house, and you might want 425, you might want 400, you might want 375. So I'll produce 3 scenarios, build all the numbers out for whatever down payment you want to use, whatever your budget is, whatever you're looking for. And then I film a video, and they're usually about 5 or 6 minutes long, walking you through your numbers for your, and I do this every day around 4 o'clock. I film all my TCA videos. And but it's for that family, for that person buying that property or a property. And it's personalized to them. And I believe that is probably one of the greatest educational things that we could do. It takes my team time, it takes me time, but we have it built into our system, and we do it because it's the greatest educational thing that I've ever been able to produce. Cool. And then no one ever goes out to look at a home, gets an offer on a home. Y'all have spent 2 weeks with them, going all over DFW. They get a $400,000 contract. Everybody's excited, and then they walk into their and get their mortgage or something, and they go, "What do you mean this payment's $4,000 a month? I can't pay $4,000 a month. I was going to be $2,000 a month." Well, why did you think it was going to be $2,000? Well, because no one told me. My loan officer never said anything. This is the kind of craziness that we hear.
Or they're going on Google, to your point about going online just to find information.
And
Google has a built-in mortgage, payment calculator, but it's like it's not. When I have used it to and then compared it with what y'all give people, it's not accurate. It like ballpark within like 500 on either end. Maybe
$500 is a lot.
It's a lot of money. That's my point.
A month.
Exactly.
So that's the problem, is that when people don't have accurate numbers to the best of the ability that they know of what they're looking at. Texas has some of the highest property taxes in all of the country. That's reality. So, but we don't have a state income tax.
Right.
So we balance very well. And for a lot of people, we win because they're not paying a state income tax and they're only paying property taxes. So, but when they're coming from anywhere else, when they see that, first off, they don't.
Them out.
It's that education process. Well, you just came here from California. You're paying like 60% of your income taxes. Now you're only going to be paying like 30 to 40% total. So it's just that education of going through it.
That makes sense.
The TCA, I think, is probably the greatest thing that we in the mortgage space can do for a family. And the one thing that I never hear which you're going to love this. No one ever goes, hey, Jefferson, on my other TCA, they showed me these numbers. No one does it. And, which is, to me, it's like fantastic, because it does give me the ability to stand out.
Yeah.
Sure.
But it is a lot of time and effort to do them every single day.
Yeah. Every time I see one, it's like I just always. That's the thing I think about. Is like, oh my gosh, like.
Such a good service.
The amount of time that you spent doing that. Yeah, that's I think with that. I heard a guy on a podcast talk a lot about how the values and the inefficiency, and so I certainly appreciate the way that you give of your time like that to help our clients. It's a big deal.
I appreciate that.
Yeah, it's really really cool.
It's such good learning for them.
All right, I forgot one question, and then I want to go into your forecast. All right?
Sure.
So one question that just came up, or that comes up a lot when talking about. I just forgot it, so I'll have to ask you about it later. It was in my brain, and I should have written it down. I sure did. Right. So let's do forecast, and maybe it comes back while you're talking about forecast.
Okay.
So let's talk your forecast. So interest rates have been the story of 2023.
Yeah.
Right. That has been the story, and we are all, interest rates are
the Great Depression of interest rates. Right?
It has been the story, right? Yeah. So I think what a lot of people have concerns about and are interested about is what the heck's coming next.
Sure.
Right.
Sure.
So talk to us about that.
Yeah. So, for up until basically the beginning of the fourth quarter, there were two sides of the camp. It's going to go on for another year through all of 2024. They could keep going up, et cetera. Yeah. Then finally, good news in October, when the Fed met and, they started saying, hey, I don't think, they're saying collectively, we think we're going to be able to hit that 2% target. The market is slowing down enough.
CPI is looking good.
CPI is looking good. Inflation's coming down, et cetera, et cetera, et cetera. Now there's a system that we use. It's called the MBS Highway. It's not a consumer thing. It's a mortgage banking world thing. Okay. It's a website that we use for a lot of our data, and you have to spend a pretty good chunk of money to be on that system, et cetera. But there's a Wall Street poll and a bunch of people that they've polled in there. And these are, really, really good sources of data as far as, so they've sent out this poll to all these people to figure out, okay, hey, what does everybody think the rates are going to do? So I think the source itself has its own set of validity in our world, so I feel safe in giving it out to the public because I think it's a good source of information. Okay. Because there's a lot of noise in the space of. I mean, if you go on YouTube right now, there are people calling for the end of the world by the first quarter. The economy is going to crash, et cetera, et cetera.
There's going to be a war.
Yeah, Y2K, Mayan calendar.
Absolutely.
Locusts and all kinds of things.
Yeah. So I don't believe things are headed in that direction. I think we could see still a lower hit to the economy. Sure. But I don't think it's massive destruction. But, that's the way people on YouTube make money, by clicks.
Views.
So, unfortunately, there are people that just believe everything they watch on TV and YouTube. I don't know. Okay, so here's the and the title of this is we made a flyer. We're going to be sending this out to all of our clients.
Yeah, they're visual.
Everyone wants to know when the Fed may lower interest rates. Okay, so December 13th, 0%, not going to do it. January 31. Only 4% of all the people polled thought it was possible. Wow. So let's assume January is probably not going to happen. March 20th. Okay, so these are all meetings for the Fed throughout the year. These are the dates that follow the meetings. 35%.
That's a big jump.
We could see the first cut.
That is a big jump. Wow.
Okay.
Because that's going into the summer season too, which is a big deal.
Yeah.
There you go.
Yeah.
So the spring season, boom, kicks off.
Wow.
Normal, kind of market rate. Everybody goes, oh my gosh, they just cut a quarter, a half percent. It's time. Go
it's
find
a frenzy.
a house.
Yep,
do it now.
Wow.
May 1st. Okay. May 1st is the next meeting. 69%.
Wow.
Okay. June 12th. Okay. So now we're into the summer, the very beginning of the summer. 89%.
Okay.
So what you're seeing here is collectively, and let's go July 31, 96%, September 18th, 99%, November 7th, 99%, and December 18th, by the end of next year, 100% of all the people that looked at this, and it's not people like me that got to vote on this. This is like, all the people that they went out. Yeah, this is kind of the stock world, Wall Street.
Yeah.
Hey, here's what we're betting on the market doing based on what we know about right now. Okay. So the reality of this, the market that will follow, no one's going to be refinancing. Let's say they cut 0.5% on March 20th. No one's going to refinance from 7.5 when the rate cuts 0.5%. That's going to move the interest rate to, let's say it's 7.25. Something really small, 7 1/8, or 1/8 off of 7.5% into the consumer. No one's going to run out and refinance. Okay. So, but by the end of 2025, mid 2025, historically, if you look at the historical market drops, whenever we've had 7 major interest rate hikes and 7 downward spirals on interest rate once the Fed starts lowering that. So that's happened 7 times in the last 100 years. There's a chart that shows that the Fed pummels the rates down to spark the economy, to get it moving again. Okay, so we can assume probably they're talking about a target interest rate from the Fed of around 2.5%. Wow. So right now we're at 5.25 to 5.5. There's always a quarter lag, a quarter possibility in there. So they're going to take it down to somewhere around 2.5%.
Is that the Fed funds rate, or is that
that's the Fed funds rate?
Okay,
the Fed funds rate, not the
not the 30-year
consumer
mortgage rate.
Yeah. So
what does that translate to in consumer world?
Depends on the spreads, right?
Well, it depends on a lot of things, but let's just say 5.5%, 5.25% right now is producing 7% rates. So let's go simple.
Knock it off. Yeah.
Now, Wall Street still has risk priced in that. Okay. But at some point, Wall Street's going to start taking some of the risk out.
Yeah.
Okay. So when they go risk out or risk off, now let's say it's 2.5% from the Fed. Let's just drop it roughly 3%.
I was about to say 3%. Yeah. Which gets you to between 4 and 5.
Yeah. So it's going to put you somewhere in that high 4s, low 5s.
It'll be a crazy market again, won't it?
That's a very normal.
Yeah.
That's a normal
very
market.
busy market.
Yeah. Absolutely. So that means people are buying homes. People that are at 3.25% are selling a home to buy a home if they're just going to 4.75 because now they've got 4 kids instead of 2.
Right.
And they've been waiting, but they were not going to pay 7%. Okay. So that world all of a sudden just completely opens up.
Wow. Okay.
All right. It's a prediction of
That's right.
Jefferson.
That's it. Now, that. Now,
and it's recorded, so we have it to play back next year. So.
That's a prediction from a really good source. But at least I can cite the source and go, hey, look, this is what they told me.
This is what they said.
But I feel like I'm providing, pretty solid data based on
based on where it's coming from.
Based on the sources.
Absolutely.
Cool, man. Well, appreciate that. Tell the people where they can learn more about you and what you do.
Sure.
And all that kind of stuff.
You can always Google Jefferson Aldredge or Jefferson Home Loans. Anything. I'm probably the only Jefferson in the home loan business that I know of. So I have Google reviews, Google business reviews, Zillow reviews. There's reviews everywhere. Just because we've been doing this that long, So I'm real confident. Hey, just go Google me if you want to, read up on me or something, et cetera, et cetera. Also, our website is just thejeffersonteam.com. Which is real simple. The Jefferson Team, THE, because people always go, did you say V? I said, no, the Jefferson Team. Okay, so, the Jefferson Team. So, I'm from the South, we just say the. But, it's real simple.
Cool, easy stuff.
Yeah, absolutely.
Well, look, I know I talked for Gene here, but man, we really appreciate you and everything you do for us and
taking
our
care of our
clients.
clients.
Taking the time out of your day to do something like this and film this. I mean, we just really appreciate you. So thank you.
I appreciate being appreciated. So, and just so everybody knows, and I don't have to say this, but I'm here with them doing this podcast, but working with them over the years, what they will do for a family far outweighs what I've seen a lot of people do for families. Thanks. So hearing it from the lender side, I think helps. You didn't ask me to toot your horn, but I'm going to toot it anyway because I've seen y'all go way over and above taking care of families and helping negotiate. And sometimes it's about the temperament of the people you're working with. And I've worked with y'all on a lot of deals and I've seen, people get angry and y'all have just a joyful, even temperament to deal with, and you're good people. So I appreciate that from y'all.
Thank you.
Thank you.
It's nice to work with good people.
Sure. That's right.
Because occasionally I get to work with not good people.
Sure.
It's part of our business.
It is.
I got to get a family closed regardless of who their agents are. And every once in a while you'll meet some people that are just tough to deal with.
Sure.
Yeah.
And that's okay. Yeah. That's life.
Makes the world go around.
Yeah.
Cool, man.
So
we'll appreciate that very much. Thank you.
Yeah,
absolutely.
thanks.
Absolutely.
And if y'all want to learn more, make sure you Google Jefferson, jeffersonteam.com, the Jefferson.
The Jefferson, yeah.
Make sure to check that out. But as always, we always appreciate y'all tuning in each and every week. And we'll catch you again next week. Hey, thank you so much for watching the podcast today. If this has been valuable for you at all, we sure could use your help getting the word out to more people. If you're listening on Apple Podcasts or Spotify, go ahead and give us a follow and consider taking just maybe 2 minutes to leave us a review. Both do wonders for our show with the algorithm, and on both platforms, all you gotta do, head over to our show page. On Spotify, hit 3 dots and select rate. And on Apple, all you gotta do is just scroll down to the show and say leave a review. So just click that. If you're seeing this on Facebook or Instagram, a like or comment puts all the good vibes out in the algorithm for us. And on YouTube, make sure you smash that like button, subscribe, and hit the notification bell so you can be notified whenever we post a new episode. Join us again next week for more Fort Worth housing news and updates. Until then, y'all have a great week.